Welcome to Zoom at 8. My name is Julie Peterson, and I am your host tonight, as well as a Senior Vice President, Director of Old Capital Lending. So listen, we have been doing this Zoom at 8 for over 3 years before the pandemic, okay? So this is not just something that came about that we all decided, we're bored as heck in our houses. We've been here for a long time. We've been creating value for our investors, for our audience, by bringing professionals who are doing this on a daily basis in this community. So tonight, I'm very excited for you guys to meet the broker studs from GREA out of Dallas. These two guys are excited to share what's going on in the brokerage world. So tonight, we've got the broker studs. We've got Ryan Quaid. All right, so Ryan Quaid, if he's the one that's on the left on my screen, we put him as Buck, but actually it's reversed. So Ryan is on the left and Buck is on the right. So let's hear about Ryan. Ryan Quaid, he began his career in multifamily investment sales in 2021. Man, oh man, have things changed since you got here. Following a successful career playing professional basketball in Germany and internationally, Ryan felt a strong pull to the industry, which presented a number of parallels to what made him successful as an athlete, and which he felt would allow him to provide superior service to his clients. Upon seeing the exceptional market fundamentals of the DFW multifamily market and the tremendous growth of GREA, which is where these guys, brokerage firm that these guys work from, GREA, Ryan moved to Dallas to join the secondary markets team. Ryan's familiarity with secondary markets stems from attending West Texas A&M in Amarillo, where he graduated with a dual bachelor's degree in finance and accounting. He earned an All-American honors for basketball and became the winningest player in program history. Man, oh man, great to have him on our team. Outside of the brokerage, you'll find Ryan involved in church, at the gym, watching and playing sports, or competing at anything and everything. So we welcome one stud, Ryan Quaid. Thanks so much for joining us, Ryan. How are you?
Doing super great. Thanks so much for having us, Julie.
That's so fantastic. Now, let's meet up with Buck Poderski. Hey, he began his career in commercial real estate during college in 2018 when he started as an intern analyst at a private equity real estate firm in Jacksonville Beach, Florida. He focused on assisting in underwriting and refinancing of A and B class multifamily, as well as the sale of 1,000 plus unit portfolio totaling $165 million, all within the Jacksonville, Florida market. After graduating from college, Buck studied the national multifamily market and saw that DFW led the market in multifamily sales in 2020 and seemed to have the strongest tailwinds that for that trend to continue into the future. Buck moved to Dallas, picked up his bed, moved to Dallas, and he joined the workforce housing team at GREA. He is a graduate of the University of North Florida, where he earned dual business degrees in economics and finance. What I find most exciting is that Buck is an Eagle Scout. So is my son. This is fantastic. In his free time, Buck enjoys going to the gym, training for marathons, and walking his golden retriever named Arlo. So, hey, stud number 2, Buck, welcome to Zoom at 8. How are you doing?
Thank you so much. Yeah, doing great. Super excited to be here. It sounds like we've got some people that are familiar with the Jacksonville market. So shout out to the hometown, and excited to launch into it.
This is fantastic. So before we get started, let's give our speakers all of our attention. Still looking and watching what everybody's shuffling papers in the background. Go to the right-hand side of the screen and go to speaker view. You probably see me. Hi. On mine, I see the 2 studs, the broker studs. And listen, there's been a lot of change going on in our market. we talked about your background. We know that GREA is a new firm.
Yep.
Kind of, right? They came outside of Greystone. So if you would, before we get started on what you want to share, tell us a little bit about that transition, how it came, and a little bit about GREA.
Exactly, yeah. So right now, GREA consists of 12 different multifamily offices throughout the country. We are about 5 feet wide and a mile deep, focused mostly on value add multifamily. We do have some institutional clients as well. For us though, here in the DFW office, for those of you in Dallas, we're on the northern end of 635, right where Preston meets LBJ. We were with Greystone for about 2.5 years as a joint venture. We served as their investment sales office, initially because they were the lending platform we were using the most at the time, and our partnership allowed us to use their back office suite. Prior to that, we were partnered with SVN. Some point last year, Greystone offered to buy us. We didn't really want to give up control, and the vast majority of the business we were doing, Greystone was actually no longer lending on. We still use them today at times. We have a correspondent relationship with them. However, we felt it was best to maintain control, start our own firm. We joined up with some of the other investment sales groups across the country. Some were with Greystone, some were independent, formed GREA. Today we have 12 offices, did over $4.5 billion in sales in 2021. We're on path to hit between 5 and 6 billion in sales this year. Yeah, I mean, basically, offices in New York, Miami, Chicago, Portland, Texas Triangle, pretty much everywhere, Atlanta as well. Just opened up a new office in Arkansas, and really just going out there and trying to crush it.
Well, this is fantastic. Now, with all of the changes that are going on, you guys are off and running on your own, which is fantastic to see. We've got a lot of new people, just so the audience here. We've got sponsors, we've got business partners, we have, the new educated people who want to be GPs, who want to, passively invest. What we want to get out of tonight's call is what has changed. What are you seeing changed in the environment? And if you know of different, your different offices, maybe they're seeing, maybe you guys meet as a whole, and what they're seeing, maybe you could share that with us. But what is really important is that we want to understand, since things have really changed, how do we communicate with you? What do you want from us as investors? What do you want to have? How do you want that phone call to go? How do you want the relationship to develop? And what can we be doing to be providing you with, what is important to us? So if you wouldn't mind kind of going through that. I know you have a presentation for us, and we'll probably be going through a lot of that information. If we've got questions, we'll hold those till the end, and it's your show now. Thanks so much.
No worries. Thank you for having us. Would you like us just to go straight into the PowerPoint?
Yeah, I think that would be good.
Okay.
Yeah.
Sweet. All right. So let's we'll share screen here. Just 1 second. Okay. Are you able to see our screen, everyone?
Not yet. It says now we got your Zoom.
Perfect.
But all it says is use the Zoom app. There you go. Okay, perfect.
You see Zoom at 8.
Zoom at 8. Oh, you are broker studs, I tell you. Now, do you want to open that up for? There you go. All right, you're off and running, my friends.
Perfect. Okay, let's see. There we go. We got Julie in the corner. All right. And then I just want to make sure we've got, this kind of not taking up too much space here. All right. Well, yep. Like Julie said, Zoom at 8. I figure we would kind of just, let's see if this is gonna do it. Do we have to click it? Uh-oh. There we go. Okay. So yeah, just wanted to dive back into the stats at GREA here. If we just be self-promotional for 2 seconds. Todd would kill me if I didn't at least give you guys hard numbers. Like I said, for 2021, 4.5 billion in sales so far this year. Mid-year, we're over 2.5 billion in closed deal volume, 17% increase over last year, even with some market turbulence. Over 202 transactions and over 20,000 units sold. 12 offices across country. Currently in the DFW office, just so you know what Ryan and I are working on and what we're seeing so far. We've got 21 deals under contract right now, multiple listings set to hit the market as we go, and some off-market transactions as well. More than happy to, as we go through this presentation, tell you exactly how you get to the point where you get to be exposed to those off-market deals and how you build those relationships with brokers and how you win them. We've got 15 brokers in the office right now, 2 just joined in the last week. Several debt correspondent relationships. We work a ton with Old Capital. They're great people. Highly recommend Julie and her team. And then, future plans, we're expanding into new markets here in the next couple months, and we're building out the equity side of the business as well. Happy to talk more about that later. Julie gave us such a great introduction. I feel like maybe we just skipped the slide as well. But over $600 million in deals closed between Ryan and myself today. So okay, so Julie, does this look good to you?
Yep,
just start.
looks awesome. Perfect.
Perfect. So how to establish a relationship with a broker? Number one, you want to be active. I know we've got a lot of people here tonight that are just starting out and trying to get educated. And I think that's even when you're just starting out and trying to put things together, you want to be out there looking at deals. You want to be underwriting them, going through the financials, understanding what to look for, and then obviously learning about different submarkets, right? Because whether you're in Jacksonville or you're in Dallas, there's like a dozen different neighborhoods, and each one is different, and you really have to understand the microcosm in which you're operating, right? So that's the job of Ryan and myself, to understand those market fundamentals and being able to tell everyone here sort of what to look out for. In DFW alone, I'm sure, Ryan, you've got these in secondary markets as well. Water is more expensive than in Garland, let's say, than East Dallas, right? And Richardson has different controls in place than, let's say, Fort Worth does. And so you want someone on your team that's going to know that. Obviously, Julie and her team are going to know what to look for as well. They're going to give you great guidance via debt. But being active basically means every brokerage has a distribution list, right? We are blasting out our deals that are on the market to as many people as possible. We want to be able to go back to our clients at the end of the day and say, hey, we expose this to the entire market. What that means is you want to get on those distribution lists. Whether it's our firm or another one, you can go on their website. You can find out exactly, what type of deals are on the market currently and what might be coming up. You can keep track of when deals go under contract and when deals close. Typically, the way it works at our firm is, we have confidentiality agreements attached to every deal that we come out with. That's sort of our way of keeping track, of who's actually signed a CA or who's looked at a deal, so we know who to call. Ryan will tell you, he's hammering up the phones daily. I think, how many phone calls did you do today?
Somewhere close to 40. More cold calls. I think CA calls go a little quicker. Those are more of a warm call.
Yeah.
But yeah, like Buck is saying, we use those CAs to track who's looking at the listings. We call all those people every single listing that we do. So you're looking at a list that could be anywhere from 50 to 80 people. That's our job, to reach out to you guys, find out what you guys look for in a deal, what you're interested in, what's your buy box, how many units are you looking for, what vintage are you looking for, what submarkets are you looking at, and then from there we can kind of refer you on to other brokers, and we can help you out ourselves. So that's definitely a big part of establishing a relationship with a broker is obviously being active, getting involved in the marketing process, and really just being honest, because I know a lot of people here are maybe newer investors, but it really doesn't matter. We talk to new investors every single day, and we're more than happy to walk people through a deal or our underwriting. We're more than willing to review that type of stuff, but it definitely takes the effort on both ends, because more or less, that's how we spend our day. We spend our day talking to investors. We spend our day marketing deals for our clients. And I mean, honestly, we want to talk to investors and we want to build those relationships. So I think that's it's a big part of establishing that relationship, is signing those CAs and getting involved in the marketing process.
Yeah, and really taking our phone calls too. You know, a lot of the time, you know, it's not uncommon in DFW to have a CA list that's, you know, up to 200 people. And if I'm leaving 200 voicemails and I'm not getting many people picking up, it is so boring. I'm saying the exact same thing over and over again. I want to bang my head against the wall. Yeah.
And I'll say one thing, if you're signing confidentiality agreements and you don't pick up the phone, we notice. And after about 2, 3, 4 times of calling you, we're just not going to call you back. We're just going to assume that you're not active, you're not really paying attention, and you're not that serious about it. So yeah,
there's definitely some names on some CA lists that I have today where I've seen a person, you know, sign it like a couple times on my deals. And you know, at that point, it's almost like, okay, sometimes I'll make the call just because I got to make the call. You know, it's my job to. But you know, it's not something I'm looking forward to doing, because I know I'm just going to be leaving a voicemail, or the voicemail box is full and I've left you 20, you know, in the last year. And so, but yeah, that's going to be a big one.
That is a big thing, you guys. I want to really bring that to your attention, you know, the audience. So what if you want to underwrite it and you're getting, you know, you're just new and you're underwriting it. Maybe you don't necessarily have you're not anticipating moving on this, but you get the phone call, you don't pick it up. You get the phone call, and you know, that's a very big point. So what is your recommendation? Because I think a lot of people want to just look at it. They want to understand it. They want to run it through. They have no thought of going further, and they don't. Yeah. So what are your thoughts on that? Because that's a big deal.
Yeah. So, you know, on my side, I was an analyst for 2 years before I was a broker. And much of that came from the private equity side. I worked on acquisitions, I worked on dispositions, and I worked on a ton of refinances, right? So when, you know, let's say someone is underwriting and they're not planning to move on something, still pick up the phone call, because I can tell you that there are different echo chambers that exist out there of how people approach their underwriting. And let's say you're in a mastermind group today and you're not exposing yourself to other perspectives. Like, let's say I know that there was a mastermind group I spoke to a potential buyer from, and they were saying that they should only buy 8 caps, right? There's like, I haven't seen an 8 cap in my career. I've been doing this since 2018, when yes, the market was definitely greatly appreciated in that point. But you know, like Q1 of this year, I sold 2 properties, both at a sub 2 cap in place, you know? So you're not going to win a deal if you're only underwriting to an 8 cap. And I can tell you, when I bring a deal to market and you've signed a CA, myself, other brokers in the office, our senior analysts, they've all gone through the underwriting. It's solid. And if you're off, and you might think you're just off 10K a door, but if the price is 100 a door, you're off by 10%. You're never going to win a deal being off by 10%. You need to know how to fix that delta. And I can help you. And I can tell you, even if you don't agree with my thesis, right? Like, I'm not saying you have to underwrite like me. Several of my clients don't. But I can at least tell you where the market is and where it's underwriting, because where, you know, if you're out there buying deals, you know, even the most active people, they're clearing maybe 10 deals a year, right? If they're doing a deal a month, okay? Well, you know, at any given month, we have 20 to 40 listing or 40 deals under contract. I'm seeing all of it. And we're meeting several times a week to go over all of these deals. Like, a broker is there to be in an advisory capacity as much as they are, you know, in a sales capacity. So I would really recommend you still taking the phone calls, you still learning how to underwrite. And here's the other thing too, man. If I can go to my seller and I can give them some more pricing guidance, that helps me. And if you're helping me and I'm the broker, oh my God, I'm gonna help you. You know, it's real estate and Julie will tell you, Julie's a super connector, right? It's a relationship business, right? You help me, I help you. And I think, same thing, Ryan, I think would agree with me. Same thing is getting out there and touring a property too. I'm fine with touring someone through a property if you have no intention of buying in the next 12 months. Because when you are ready to buy, I hope you buy from me, But, so, yeah, and finally, the last part there about being active would be, offering on deals. And you really only want to do it when you're ready. And you've got the capital and you're confident in the deal, you've gone through your underwriting. I think we're going to get into that too. We have a slide as far as like how to never win a deal again. Ryan and I both have stories of people, of buyers having an accepted LOI. They're moving to contract. They're at the final revision of the PSA or even under PSA. And then, oh, I didn't expect this, or, oh, whatever, so, and then they drop. So,
Right. And I will say, we did meet Julie at a dinner after a conference. We were at dinner with some investors, I think about 6 to 8 investors getting steaks, and Julie was there with another crew and ended up running into her there. And sure enough, here we are. So it's certainly a business of connecting and getting together and just, talking real estate and getting to know each other. That's just, you have to do it.
Well, I think what you said was really valid in that you're helping people and they're helping you. And I think that it doesn't necessarily always, people don't necessarily think that the investor is helping you, but you clearly said, yes, you're helping me and I'm helping you. And I think you don't want to get into this. It's been unbalanced. I think over the last couple of years, it's been a little unbalanced. So I'm anxious to hear, and you're going to go through this, I'm sure, of how maybe, it's getting back into balance and how we can help each other understand, getting that back in balance. So keep going.
Yeah, absolutely. And just to touch on that too, I mean, I think a lot of people, and I said this to Julie before everyone started hopping on, I think everyone sort of sees brokers as these promotional people. And at the end of the day, we're also realists. If I told all of my sellers that have 60 vintage properties with cast iron and chiller boilers in DFW with 2 million of deferred maintenance, oh, you're going to get 250 a door. I wouldn't be selling anything. You know what I mean? Like we're real people. Like we also understand the deals. We also are very tied into, let's say, remediation processes on buildings and exactly what fixing up deferred maintenance looks like and how much it costs. We're actively looking at these things all the time. Every broker in this office is pretty much an investor. Some of us are younger in the life cycle than others. But we hear the stories and there's a really big mentorship that happens in this office, especially. It's very collaborative. But to jump back in, let's say to building these relationships with brokers. I mean, if you're with Ryan, you might want to go play basketball if you're tall enough. And
maybe not. I don't know.
But pretty much every broker, if you ask them to go golfing, oh my God, we would love to go golfing when it's not 110 degrees outside. Anytime.
Right.
And then eventually get into lunches and drinks. I think it's still important to be signing the CAs, taking the phone calls, making phone calls to brokers, going on tours, offering on deals when you're ready. But the more we can move that, let's say like outside of the business world, like I have some clients that I've sold properties for and I've listed properties for, they're genuine friends of mine. And that happened over a 6 to 12 month timeline, and we golf and, our significant others like know each other and we've got some stories together now. And, that's really what holds that together. And, the final one I would say too, there would be bringing value, and Julie's like what we're just talking about, where, you as investors are helping us just as much as we're helping you bring deals or check out deals.
So I want to pull over for a second because there's a lot more women in this industry now. Okay. A majority of the people on the call are female.
Yep, absolutely.
We may not be going to golf.
That's fine.
we may not be sitting down and having drinks with you.
Uh-huh.
Okay. Can we go get pedicures together? Can we get our facials done together? What are we doing to make sure that we're hitting this other demographic? Seriously.
Yeah, well,
There's a lot of females that go, we are not playing on the same field as the gentlemen. And I really want to get it out there.
yeah.
Talk to us about that. You guys going to go to pedicures?
Number one, I've had several pedicures. Okay. Only I just can't get my nails trimmed. I don't like when they trim my nails at a pedicure, but I'll totally go. It takes zero convincing. Yeah, I mean, listen, I think it's more than anything, it's about being personable. I think, you know, I understand the golf and the drinks is maybe more stereotypically like a male activity. But that being said, I throw something out there. We all have we all have like something that we like to do that's common, right? Like we'll all have common interests. I have female clients that like to that like to fish. I'll go fish. You know what I mean? Or I don't know. Julie, what do you like to do? Like,
well, you know, if I don't dye my hair, but maybe we go get our hair dyed. You know, something massage together. Now that doesn't sound very good though. I don't know how much my husband might not like that, but I'm really looking for, and maybe people, tattoos. We could go do tattoos together. That would be excellent. I think Dean's onto something here. But really, this is a scary place for females. Okay, we need to see more women. So if anybody in the community here, maybe you're thinking about being a broker stud or studette. Maybe you're thinking about, okay, where do I fit into this world? And that may be, these guys may be triggering something. Trigger is probably the wrong word, but you're really bringing some awareness that we need some females so we can do our pedicures together, so we can, you know, live life in multifamily together, not just at the bars and the golfing. All right, I'm off my soapbox. I usually don't go there, but I just want to make sure we touched on that.
I think Bug was just creating a quick list. I think it's more, I mean,
okay.
Yeah, it's less about doing those specific things. It's more about doing, you're there building a relationship. That's really the bottom line. It's more about just making the effort to go out and like let's build this relationship. Let's do anything in person. Because I mean, a lot of our conversations, I mean, we'll talk to people 10 times on the phone before we see them in person. You know, it's very common that happens. So it's more about, you know, you're being active in the marketing process. Maybe the next step, maybe you're not offering on deals, you know, as much, you're not buying deals, but you know, let's still go out and, you know, let's go do something. Let's meet up in person. Let's put a face to a name. And
so I want you to drop something here before we go on. If somebody wants to get to Buck Poderski, what are they sending you?
An email, they're giving me a phone call, or they're texting my cell.
Okay, are they sending you a gift card for Best Buy? Are they?
Listen, I love coffee. You see I'm drinking coffee right now, and it's almost 8. So Starbucks is a great one. You know, I've got tickets to the Colonial before, which was that was a golf outing. I just like golf. Look, I'm not trying to like throw myself in a box here. I just like golf. That's it. You know, everyone has.
So maybe a golf belt, maybe some golf socks, something like that. These are things that we all do business. You know, we're trying to get people's attention, build relationships. You may have to send your broker, hey, I got this from Tammy. You know, I'm going to remember Tammy. All right. Yeah. What about you, Ryan? How do I get your attention?
You know, I think food first and foremost. Any type of food, I will eat it. I eat less than I inhale. So any type of like, let's go out, get some food, cookie, you know, anything like that. Fantastic. Coffee as well for me. And then, man, just doing something like semi-competitive. It doesn't have to be sports per se. Obviously, I prefer sports, but man, you know, playing a board game, you know, playing checkers or chess, like I don't know, just anything where you're involved in some sort of game. That's kind of my thought.
All right, excellent. All right, so we've got some ideas. All right, carry on. Oh, Dean wants to clean your car.
Yeah, is that the, yeah.
Yeah, exactly. Quiz time at a bar would be great. Trivia at a bar.
awesome.
Literally. And then to your point, Julie, funny enough, I think I'm the only broker in our office that has got something like this, but someone definitely needs to get it when they do a deal with Ryan. The last deal I closed was with a client of mine who's become a friend. I've been working with him for over 12 months now to find him a deal. I got him his first deal off market. And as a thank you, he got me a brand new set of Callaway golf clubs, which was
My gosh, that is unbelievable.
insane. So you don't have to go that crazy, but I mean, like, I'll tell you what, I'm a very loyal broker to him.
That is right. You get him to the front of the line. Okay, you said something. I want to make sure everybody understands. When you say an off-market deal, please make sure everybody knows what that means.
The off market is not listed. I'm showing this to my preferred clients. Those clients I have either a solid relationship with, and let's say maybe they've done several transactions. I just haven't gotten to be a part of it yet, and I want to be in their inner circle of brokers, shopping it to them, or I've transacted with them in the past. And I know that they're good transactors, they're smooth operators, is a very low drama transaction and high probability close. That's who I'm showing off market to. It's almost like a Marine one shot, one kill, right? Something off market. I don't want to expose it to too many people and ruin the process for my client if they decide to come on market with it later in the year or in a couple of years, and someone says, "Oh, I saw that deal from so and so." You know, these are deals that are held very close to the chest for brokers.
So I get a little bit. I feel like, oh, I'm special. And then I call someone and they say, oh no, I saw that same deal 2 weeks ago. I'm like, hey, I thought I was special.
Right.
So how does somebody deal with that? Because everybody's egos can be a little bit, soft here. So what does that mean? I want to feel special.
I think understanding that brokers work with several people, and if it's off market, sometimes I send it to 2 people, sometimes I might send it to 10. It really depends on the seller and their appetite for exposure. This is a smaller industry than I think most people realize. Everyone tends to talk. So you are going to have some deal overlap and some deal merge there. Don't take it personally. We're trying to get deals done the same as you're trying to buy them. However, I have seen other brokers slip up in the past, get an off-market deal, and blast it out to hundreds of people. Yeah. You have to think, okay, if you win a deal that way, that's great. Just keep in mind, if you are now the owner and you want to flip around and maybe you want it chopped off market yourself, remember the broker that showed it to you that you also heard another 100 other people talk about it. Now, they might be a great listing agent, because they're really getting some exposure. If you want to keep something on the down low, you really want to go to the people aren't sending this to many people. So
very good point. Very good point. All right, carry on. Love it.
Okay, see if we can do this.
Yeah, there we go.
Okay.
You want to take this one, Ryan?
Sure. Yeah. I'll start off with this one. So kind of some key points of what we're looking for here in a buyer. Things that signal to us, you're legit. You've maybe more ready to engage, in a deal, maybe offer on a deal. Definitely get taken a little bit more seriously. Not that always matters, but these are kind of some key things that we might look for. So the first thing, Buck put it there, have a mortgage broker. I think it's the perfect point to hit on right now when we're in this volatile, capital market environment. It's so important to have a solid mortgage broker, and it's so important to have that relationship with a mortgage broker, because they're just so important always, but especially right now. So that's definitely a key thing. I
work with Julie.
Work with Julie.
There you go.
Capital. I work with James Wilson a lot. I know he works with Ryan Irving, and we both have worked with James Eng before. you know, we meet with those guys, what, once every month, just to talk about the market.
Yeah,
and
just so you guys know, like Old Capital are great people to work with. We have them in our office for lunch once a month. All right. And we talk about the market, the deals that are out there trading, any struggles we might be having. They give us an update. What is debt looking like this month? You know, you want to work with people like that who are on top of everything. I think I think you know, I highly recommend.
Absolutely.
Also, real quick here, sorry, I'm just gonna steal this. I also see the chat going up in here. I just kind of wanted to I didn't want to skip too hard and just not talk about what people are saying. I think Dean's funny. The only select 50 buyers saw it. That does happen. I think that's just yeah, that depends. Just like I said before, what broker you work with. But Angel had a question. What do you consider off market as pocket list for your higher list? What do you mean is
Pocket listing more so.
But what do you mean is your higher list? More
important list, like those are your really good clients, I think is what she's saying. So.
For your top closers. Yeah, Angel, I would say, unless I have a lot of faith with someone I just haven't worked with yet, and I have very solid references from other brokers and their mortgage broker, like if Julie comes to me and says, this person can absolutely get it done, then, you know, we've got a shot at going for it. But yeah, so I just didn't want to ignore the chat. I know we're moving.
Yeah, I'm good. I'm watching you. You're good.
Okay, perfect.
Okay.
Yeah, keep going, Ryan.
All right. Yeah. Point number two, a big point for us, kind of what we're looking for in a buyer, transaction history. Now, obviously, we have a lot of new investors here in the room. See that all the time. Being transparent with where you're at. Maybe you have 5 single family homes. Maybe you have 5 duplexes. Maybe you own 500 units. You know, all that stuff is material. We need to know that type of stuff, because at the end of the day, we are the person between you and the seller, and we end up selling you to the seller. Okay, here's this guy that we have. They've toured, they've called, we've had these conversations. They know Julie. She's gone through underwriting with them. We've gone through underwriting with them. You know, all these factors line up, and then suddenly, you're in the best and final, and you have a chance to win this deal. So just, I don't know what point you're exactly getting at with transaction.
Yeah. I think, especially on a listed deal, typically we'll have a call for offers date. And then we will also have like a best and final. And going into best and final, we typically we'll typically put out like a best and final questionnaire, right? We want to know, who are your references? Like what mortgage brokers have you worked with in the past? Do you have title reference? Do you have you closed another deal? What broker did you close it with? That sort of thing. That's what we're looking for.
Right. Absolutely. I'll let you take the next one. What do you want to highlight there in that third point, Bob?
Yeah, so easygoing, non-emotional. Listen, totally fine to be completely stoked that you're getting a deal. I mean, we've had so many like chest bumps and stuff in the office, and like we've shouted and everything. I mean, we've gone and popped a champagne and sprayed it everywhere. That's really fine. When I say like easygoing, not emotional, anecdotal evidence here. I had a 50-unit deal with Mark Allen in my office. It's called West Creek Townhomes in Fort Worth. Had a buyer totally yelling at me the whole way through. Didn't want to talk to Mark anymore. And just really, it seemed like everything was kind of just poking them the wrong way. And he would yell expletives at me and everything. It's just like that. I don't want to go through that process again. You know what I mean? As a broker, like I'm a person too. Like a lot of times I'm just a messenger more than anything else, and don't really want to get yelled at. So I mean, and that's a real consideration for us too. You know what I mean? Because
so no one wants to deal with you, and you're going to lose opportunities. And that whether it's a down market or it's an up market, we want to be creating good relationships. We want to be doing business together in the future. So any of that kind of crazy business is going to, give you a check on your back that no one wants to do business with you. So making sure, and Dallas in particular, you guys, if you make a mistake, you can be out. You got to be very, very careful, especially, you know, in the past. So these guys want to make sure they're, you know, they're giving you a lot of input so that you can be successful. But you know, acting or getting into a transaction and then minutes before pulling out, that is a check on your back, and you're not going to be given opportunities. It is crazy like that. You can call it the mafioso if you want, but it's truly, that's how these transactions get done. It's who you know, how long you know them, how easy you are, you know, not complaining about this crack and that crack and all of that, but I'm easy to do business with. All right, carry on.
Yeah, and just and understanding, you know, issues you might have with the deal. Like the last thing I want to do is take a leap of faith on someone, and then all of a sudden they're coming to me saying, oh, well, you know, let's say there's this huge foundation issue, right?
Yeah.
And it's really not that big of a foundation issue. It might be something that costs you $20,000 to repair, and let's say it's a $25 million deal. If you're gonna retrade me on less than like 0.5%, it's just not gonna, it's not gonna bode well for you. We really want people that understand, you know, what types of risks come with different asset classes and what vintage you're getting, and maybe what tenant demographic is on the property as well, and knowing exactly how to roll with those punches. Because Julie is 100% right. In the Dallas-Fort Worth market, it is sort of like the mafioso. We are all very close. I have friends at other brokerages. I have friends in title. I have friends at different law offices, different property inspectors that I'm friends with, and several different mortgage brokers I'm friends with. They will tell me, you know, who was on what deal and how they acted, and you know, what issues they had. And you might not know it, but you might talk to me, and I'll probably already know a lot about it. And I'm not going to tell you because it weakens my negotiating power later, but like, it's just a real thing to remember. Like, Dallas is a very competitive market, and it's a smaller pond than a lot of people think. It's the biggest market, the best market in the US, in my opinion. But it is definitely a challenging one to get ahead in, and your reputation is everything. That's the last point there.
Awesome.
Reputation is everything.
Yep, absolutely.
What they say about you, that goes so far.
Absolutely. All right, keep going because we're running out of time.
Yeah, I know. I'm sorry. I'm a little bit long-winded here.
No, okay. It's all good.
How to win a deal, setting expectations. I'll just go through these real quick. Understand your debt options, being fully vetted. Obviously, I want to be able to go to someone like Julie and ask, make sure, hey, can this person really get this deal done? I want her to tell me, yes, they can. It's that simple. There's a lot of trust that we put in the mortgage brokers that we work with, and especially Old Capital. And, you know, if they tell me you could do it, I'm going to believe them. The next thing is underwrite to realistic returns. This is the same thing we were talking about before, hopping on the phones with us and understanding how we're underwriting deals. No listed deal is going to be an 8 cap in a primary market. I need you to understand that going into this. And I need you to offer as such. You know, I have 544, oh, actually, hold on. 565 units under contract right now in East Dallas alone. And what's it called? You know, like, they're all low going in cap rates. I've had a lot of people offer much lower than what I'm used to, saying, oh, this cash flow isn't happening. I need like 7% going into it. There's not going to win a deal. You just understand that. Realistic CapEx budget, knowing exactly what your business plan is on the property, what deferred maintenance you're going to encounter. All of that is going to come from you touring the property. That's why it's important that you get out and you tour the asset before you offer. I'm not going to look at an offer without you seeing the property first and take it 100% seriously. Now, if I know you're out of state and it's hard for you to get here and you just really wanted to get it into best and final and you're going to tour right before we do best and final, I'm willing to take that risk. That's fine. I'll throw you into best and final. But you know, you really want to get out there and tour the property before you sign PSA and have a good business plan. Next, Next is going to be reputation is everything. Solid references, don't pull out of deals, and try to establish the relationship with the broker on the front end. Had a couple deals where didn't really know the buyer going into it, and it worked out great. Other deals where didn't really know the buyer going into it, and it was a nightmare. So, you know, and like I said, that gets around. Oh yeah, and then offer market terms and get competitive. DFW is going to be hard earnest money, even in a turbulent environment like today. Still expecting to put 1 to 2% non-refundable at PSA. You know, I'm expecting a 30-day due diligence period, in some cases 14 or 21 days, and closing within 60 days of signing the contract. Typically, 2 15-day extensions are normal, with an additional $25K in hard earnest money for each extension, and a 5-day warning. Zero financing contingencies.
Interesting. Okay.
Yeah, it's the most competitive market in the country, and you know, we want to make sure that the people that are playing this field are aware of that and hopping in there. Anything on your side?
No, I think you hit all the points. Like, we'll comment on Angel's comment here. She said, you know, reputation weakens the position, it can really strengthen mine. Yeah, I think it's a two-sided coin, right? You know, obviously, I think I know what you're getting at. Okay, is that a direct message? Okay, we can see it.
Yeah.
Sorry, don't want to put anyone.
What are you seeing as average? Oop.
It's all good.
Dan,
I promise.
okay, what are you seeing as average leverage on deals in the past 90 days? Well, that
90 days.
Let's say 30 days.
Yeah, right.
65 to 70% LTV is average.
And are you seeing a lot of bridge loans still today, or are you seeing a lot more agency or bank?
Much more agency and bank. Those that sign recourse are getting much better terms today. You're getting higher leverage and the lower rate. I understand it's not always attractive for people to sign recourse. Non-recourse is just going to cost you more. Agency, of course, is the backstop in a turbulent debt market. So much more agency debt than bridge debt. I think I got a bridge quote the other day. It was 225 or not 200, 625 bips over SOFR. SOFR right now is just over 1.5. So I'm looking at what, an 8.5 rate or an 8.05 rate. Yeah, that's really high.
That is for an adjustable rate. That's usually that's going to be a fixed rate, but nonetheless.
That one was fixed. So that
okay, fixed is right. Yeah.
But I mean, even on the adjustable rates, you know, caps are what, 10 to 15x more expensive today than they were 6 months ago. And it's a big consideration for people. Also, just wanted to look and see what was here with current economic conditions, how many people are actually putting down hard money. We've stopped, and our team members have stopped as well. In DFW, every one of my deals currently has hard money. I think I've seen maybe one deal in the last 12 months not have hard money, but it was a smaller deal in the fringes. So if you're in a primary market, typically hard money. What is a true in place cap rate? Am I reading? Is this what you're going for, Julie?
Yep.
Okay, a true in place cap rate for B or C value add property right now for DFW. I think it really depends. A lot of our valuations are still based on pro forma. If your rents are at market, Julie's telling me 5. I'd say to some extent I agree with it. I think it's come up a little bit. You know, our valuations are still based on pro forma. So if your rents are significantly below market, and you might have a buyer out there for some appetite for a bridge loan and wants to get competitive, you could still get, you know, a lower cap rate. I would say if you're north of 50 units, especially, you're probably going to be 3.5. But yeah, I mean, all the ones I'm seeing right now are between 4.5. Julie's telling me 5, so I take Julie's word. Rate cap too expensive is 3 to 4% for 2%. Yeah, I agree. Yeah, rate caps are very expensive right now.
Yep, they're about 3%. All right. Do you have another? Is there? Oh, yeah, there you go.
Okay, I'm sorry. I know we were long-winded here. Just how to never win a deal, underwriting like it's 2011. Not setting proper expectations with a broker. You know, I've had a couple deals recently where people were like, oh yeah, I'm gonna hit this number, I'm gonna hit this number, I'm gonna hit this number. Call for offers coming around. I'm thinking, oh, okay, I'm probably gonna have 10 people at this number. You know what I mean? And then, oh, I have 6. I know what you guys are thinking. Oh, 6 at strike price is still great, you know, and it is. But 6 months ago, I had 20 all at strike price. You know what I mean? And obviously, I still want to bring those higher numbers to my seller. And on a couple off market things too. You know what I mean? If I'm only showing it to a couple people and you're telling me you're going to hit this number, you're going to hit this number, and then you don't, you know, I'm going to start losing faith in your underwriting, especially if we jump on the phone and we're at the same spot too. So bad reputation, that's what we're talking about. Using emotional capital too soon in the process. This was just one last thing I was going to point out here. When you go through an escrow process, you know, it is a constant negotiation. Addendums can be added and everything. And, you know, if you have an ask and it's a really big ask and you use it very early on in the process, understand that, let's say it's a really big credit and it might even be warranted. Just understand it's going to be emotionally taxing on the seller and the broker and title to some extent too. And what you don't want to do is burn too many bridges too quickly, you know, not have any negotiating power at close. So just be aware of what you're asking for and when you're asking for it. So don't drop a deal.
Yeah.
Also, just in the chat here, who came up with the idea of money going hard? No offense, our brokers pulling together to suggest these terms. Who are the driving forces behind these terms? It really is determined by investor demand. DFW is such a competitive market that people are constantly trying to get ahead of each other. I have a deal under contract right now with 900,000 non-refundable. So understand you're swimming in you're swimming in a body of water with some pretty big fish, and they're going to have the capital burn, and it doesn't mean as much to them if they lose that. I know of some other larger firms that earlier this year put up 750K hard, had some loan terms change on them, and walked away from the deal, and it was no sweat off their brow. So I know that that's really distressing to hear to some newer investors in the market. It's just the name of the game. We really don't make it up. If I didn't see it, I would let you know.
Yeah.
Okay, I want to shift for just a second. Ryan, you haven't spoken about the secondary market. So let's get your update on that, because I think we're pretty clear about how, oh, look at that. How are you finding secondary markets with people that are new? Would you recommend that we really focus on those? I know, you know, a lot of people are saying, well, I can't get equity, I can't get capital right now. So they're looking at smaller deals. They're looking to go JV as opposed to syndication. Tell us, you know, what markets you're seeing secondary that you would see for our audience that would be a good fit.
Right. Yeah, I think kind of the story on secondary markets is, you know, a little bit less competitive. You can still hit those same return metrics that you do in DFW, maybe not at the pace that DFW has grown or that it will continue growing. But I think Texas in general, the fundamentals are just so strong. It's going to be hard to go wrong in most, or if not all, of the secondary markets here in Texas. I'll say anecdotally, you know, I'm selling deals in Waco and in Lubbock, El Paso as well. We are stepping into East Texas as well. And I mean, the demand is still very strong. I'm under contract on 120 units in Lubbock. It's a 1974 vintage property. We had 10 offers. We had an out-of-state buyer come in about 400K over ask. So it can be very competitive and quasi similar to the DFW environment. But I think in a macro sense, it's going to be a little bit less competitive overall. I will say, just touching back on hard money, I have a $14.25 million deal under contract in Waco. It's a 80s construction deal, and there's 300K hard. So the hard money is not exclusive to DFW. Maybe you guys don't like it, and I think trends are showing that it may be slowing a little bit. I think I've seen less hard money up front, more after an access period or due diligence period, and then the money goes hard, or just less hard money overall. But that may be more exclusive to secondary markets, where the demand is less and maybe the incentive is less for some buyers when their preference is to be more in a Austin or a Houston or a Dallas. But man, I mean, I can't say enough good things about secondary markets. It's like I said, you're going to hit your return metrics. Rent growth is in secondary markets, similar to what is happening here in DFW. I know in Waco, it's about in Q2, it was 13.9% year-over-year rent growth. So rent's growing really, really strong. Properties are still trading a lot. Been working in West Texas quite a lot, and just calling through the submarket, and properties are selling. So there's a lot of activity there.
What are you seeing on time frame that these deals are taking to close? Has it changed over the last 60, 90 days?
I think I'll say for some of my deals, I think just with the capital market volatility, buyers are starting to exercise all their extensions. I don't know if you've seen the same thing, Buck, but you'll see,
Yeah, I agree.
you'll have your 30-30, and then maybe with a 15 extension or 2 15 extensions with some more earnest money going hard at that point. I think you're seeing a lot of the investors exercising those at this point, just with the uncertainty going on. So maybe a little bit longer escrow process.
Are you seeing sellers at this point saying, hey, I need to get out? Are you there at that point in the secondary market? Are
No.
you seeing volatility in the bridge loans that were taken out 18 months, 2 years ago, that are now, instead of a $6,000 mortgage payment, going up to $35,000, and people are saying, I can't do this any longer. I don't have any more money in the bank. I can't execute my business plan. I need out. Secondary, what are you finding?
Yeah, I think not a ton right now. I think here in the next 6 to 9 months, we will see some more of that. Especially with those newer syndicators in those bridge loans.
Yeah.
I think to your first question, what would you say again? I'm sorry, it was just on the top of my mind.
No, I think that's really. Have you seen it change? Have you seen it change? Yeah.
Yeah.
And I
think you asked about kind of owners, saying we can't do this anymore. I think that's more of a situational basis. I think, we have a deal in Waxahachie. I'm selling with Iron Griffith in our office. We came out at about 10% above where we are now, pricing wise. And the sellers are buyers in the market. So they're saying, you know what, listen, I understand, I'm trying to buy in this market too. As much as I want to get top dollar, you have to be relatively realistic. So and then there's other buyers who are like, you know what, no way, I'm just gonna, stick to my guns. I'm gonna keep cash flowing and hold till, Q2, Q3 next year. So I think it really just depends. But
okay, Buck, what do you got? Are you seeing people needing to get out? What's your time frame, hold period? Is it extending?
Yeah, people really aren't, I think, sellers at this point in DFW aren't so much like, hey, I need to get out. I think that there probably will be more of a transition when a lot of people that took out bridge loans over the last 24 months maybe find an interest rate environment that is significantly higher to where they underwrote their refinance. And it might make much more sense at that point to let the property go and just take whatever they can net instead of going for a refinance. So I think that that's fairly likely on some of the deals. But the vast majority of submarkets are still seeing extremely high rent growth. Occupancy is still really high, so vacancy is very compressed. Revenue is growing on many properties still faster than interest rates are climbing. I don't think that that's going to be the case after tomorrow. So I think that there will be a little bit of a level playing field. I see a lot more of some longer term holders, or let's say longer term owners, now looking at their retirement plans saying, hey, I've owned this for over a decade. There's been a great amount of appreciation since I bought it, let's say right after the recession. Unless I want to hold it for another cycle, now is the time to let it go.
Yeah, I agree with that.
Yeah, and I'm seeing a lot of those sellers move more on off-market offers right now than going to market, because the timeline is shorter. And honestly, when we're bringing a lot of stuff on the market, by the time we do call for offers, the debt market has already moved on us and price softened. So right now is definitely the time to be forging those relationships with those brokers and making sure that you're on their short list to get some off-market deals put in front of you. I mean, debt's been more turbulent. We are getting less offers on properties. I think I did want to mirror Ryan. I mean, like I came hard out the gate saying, oh, we've got all this hard money. We do have quite a bit of hard money. I do have that deal with 900K hard. But where I used to have like a lot of people coming in at 350, 400 hard, they're coming in more at 100 or 150 hard, you know? And some of that's tiered. Some of that goes hard after the due diligence period is complete. There are some deals I've been a part of recently that have had access periods before any money is deposited. So just want to set like expectations correctly, but overall,
Absolutely.
in VFW are still very strong.
All right. What words of wisdom do you guys want, each one of you, what words of wisdom do you want to share with us? Last kind of parting thoughts for investors. Do we need to get into your face, you know, right away? Do we need to make our plans to sit at your desk? Can we make phone calls to you and you can, what are your words of wisdom for our audience?
You go first, Ryan.
Yeah, I think just getting on the phones, obviously we're not on the same location, just getting on the phones. I know we attend all the Old Capital conferences. We attend a lot of, you know, conferences around the country, the MFN and all, you know, all sorts of different investor get-togethers. We'll be there. I'm like 6'8". I'm sure you'll see me. Let's talk. Let's, you know, get on the phone if you're interested in secondary markets. You know, obviously, yeah, just email, get on the phone, talk. I think doesn't have to be super complicated. It's you know, it's just forging that relationship. You know.
Okay, awesome. Buck, what do you got?
Really, I mean, it's just a matter of grabbing my attention. To be honest, I have, I think 23 different properties right now in escrow. So when I said I have 21 deals, one of those is consisted of a 20 property portfolio. It's a lot to manage. So really, if you want my attention, you gotta call me, you gotta text me. You know, I'd say just stay on me. I will get back to you. Sometimes I'm just running and gunning, and I read your text and I just don't get to it. You just gotta follow up, but I promise I will get back to you. So, and then like Ryan said, we're at these events. Come find us.
Good.
Handsome broker there. I'm easy to find. You know.
Oh, that's the tallest and most handsome. That's awesome. All right. How do we get a hold of you? Give us your lowdown so we can call you and harass you.
Yeah, absolutely. Ryan's
We'll
gonna
put it-
type his in.
Okay.
If you guys have pen and paper,
Yep.
you wanna reach me, my number is 972-699-5272. Say that one
Okay,
more
that's
time.
Buck Poderski. Say it one more time. Buck Poderski. What's the number?
972-699-5272. Or you can reach me at buck.poderski@GREA.
What is it again?
.com.
972.
972-699-5272.
Okay. And that he's going to be your Dallas-Fort Worth contact, you guys. So if you need to, you know, you want to stay in Dallas, you want to reach out to Buck. All right. Mr. Ryan Quaid.
You got my number there in the chat, 214-253-4660. Yeah, I'm your secondary markets guy. I mean, I still work deals down in Ellis County. I mean, it's not like I'm not, you know, involved in the Dallas investment scene by any means, but primarily I'm focused on you know, El Paso, Waco, Lubbock, Abilene, Tyler, Longview, all those kind of secondary markets. Texas, we do deals in New Mexico and Oklahoma as well. So give me a call, drop an email, go to our website, GREA.com.
Yeah.
And if you'll see us on there and see all our deals, please call us. We'd love to talk to you.
All right. And maybe reference, you guys saw them on the Zoom at 8. You know, hey, I'm calling, I saw you, I was impressed, I want to get to know you. Okay,
And
just
Dean
make reference.
Dean already texted me, so you know.
Of course he did.
Someone's-
Dean is on fire.
Someone's got to get right behind Dean. And also, I will throw this out there. If you're in Dallas, Ryan and I are neighbors. We live in East Dallas. If you guys like ramen, let's go to Wabi House.
There we go. That can go male or female. It doesn't matter. So this is awesome.
Yeah.
We'll see you guys at the Old Capital Conference coming up September 14th and 15th. That's going to be in Dallas at the Texas Live. All right. All right. So thank you. You guys are awesome. The broker studs, Buck Poderski and Ryan Quaid. Thank you.